Right, hello again. This is video number 2, and it is essentially a tribute or a thank you, a shout out to Kemozabi for coming up with this idea. I'll have to rewatch his video because I can't remember how he came up with it. I just know that I find it extremely interesting how immensely accurate and terrifying that discovery is at the same time, and trying to use it to potentially predict some future highs and lows using present and past highs and lows. So firstly, it is called the Fib time zone, which you can find on TradingView there. I just highlighted it here just for ease of reference. 1-to-1, so with all the settings switched off, I just have the 0, 1, and 2. So it's a 1-to-1 extension, and we're going to manipulate it rather than just predicting future price. We're going to use it to measure past and future. So the anchor, again, I don't know why or how, but the anchor that Kemozabi used is on the 11th of June 2018, 11 June 2018. This is where the first fun part starts. So we're going to use that as the anchor. We're going to draw this back in time, and that's going to then move that directly into the future, starting with the first, most recent from the anchor, high and low. So the peak, even if you look at the candle, looking at the high, the open, high, low, close values here, we're going to look at the highs for the absolute targets. That gives us the high of 19,785, which perfectly then matches the low into the future of 3125. I've highlighted that with the red arrows, and we'll continue doing so with the rest. The next, so inversely, this is how we're going to call it. It's the inverse high to low time price prediction. Moving further along, we're going to look at the ultimate lows. I'm going to zoom out. I'm using a logarithmic chart purely for ease of reference. It doesn't affect anything on the price or the scale of the Fib time chart whatsoever. So it's going to look a little bit squished. It's just easier for navigating. I've color-coded the arrows just for speeding things up. So this is the second low during this cycle, which then inversely would correlate into the first high of the following cycle, which is pretty damn close. I think it maybe missed it by 1,000 or something like that. But if I were a betting man and I had to take this as a buy, which inversely would be a sell, I think you pretty much nailed it. Then if you go further back to the first low of this cycle, which would be a buy, that gives you the perfect sell. First buy, second sell, nailing it. What is the high there? 68997. So that's $69,000 almost to the tick. That is nailing the second high. That is scary. Moving along further back, now we're looking at the 2013 high, which you could use either of those candles. It's close enough. You skip a couple of candles here, bearing in mind this is the weekly chart on the crypto aggregated chart. So you miss all that sideways of nothing action. I think the absolute low was 15.79, 15.4, so about 15,500 for rounding. And this one gave us the low of 16,273. So you miss it by about $700 to $800, but you save a month of pain. So again, if I were a betting man, this is a good sell. Inversely, this is a good buy. Absolutely. That is a phenomenal buy. Things start getting a bit more interesting the further back we go. We'll just have a look here and see what happens. Again, if we just look at that as a good sell, it's a bit of a scam week going on there. Would this be a good buy? Yeah, if you look at this trend, it exhausted a bit there. That was a good buy, even though that does not anymore signify absolute highs. We're looking at intermediate cycles now. These are absolutes, which nailed it pretty perfectly. Looking at these, again, not particularly useful until we get to the next major low. So that's the second major low in this mini cycle, which is give us almost a high, missing it maybe by a week or so. That's pretty good. If you consider that a sell, then this should have been a buy. That's inverse and correct. There's the first low, which would be your first buy. which would now translate to your second sell. Again, that's pretty good. So you're looking at the hundreds and the 100,000s, considering where we were at that time. And then had quite a substantial drawdown into 74. That was a good sell. This is a good buy. The inverse correlation still stands strong. Now I've got the green arrow here, and I believe this is where the divergence starts. So I think I actually had another, it's the same one. Here we go, yeah. This is where it still gives us some relevant data. This nails the absolute peak, 126,230. But this was an intermediate peak as well. So from here, that's why I put this note here, divergence, or it diverges from the inverse to the direct usability prior to November. So here we could still say the tops would be the lows, the sells would be the buys, and vice versa. Whereas here, it's now become a direct correlation. The peaks are the peaks and the lows are the lows. So here we have the peak, which then gives us the ultimate peak here of 126. Now we are going into no man's land, essentially, considering this is aggregated data and it's old data, and there was some data missing here. So how relevant is it? I don't know, but we have nothing else to go by, really. But if we were to play a speculation game, which is exactly why we are here today, if that were to form a low, where does that predict it into the future? So we have a bit of a low here. So would that be a buy? Oh, I mean, hindsight's 2020. That doesn't look like a good idea now. But it wasn't bad, buying at 80 and going up to 98. This gives us a little interim peak over here, which is our 90-something thousand. Yeah, that's a pretty good sell. If there was a peak, there was a sell. It was a pretty good call. Now we're getting into some serious scam wicks. So that looks like that could have been a low, and then it pumped. And we are pretty much in a low here. So this was buying in the 60s, which if we look at where we are today at 72, 73,000, yeah, it is. That would have been a good buy. There's a scam wick high, there's a scam wick low. So now we're going into the future. So there's another low. This gives us the 16th of March. Now, the first time I looked at this chart, I was using it as an inverse correlation, not realizing what I just realized, where it directly correlates prior to 2011. So I was using March 16 as my sell by date, looking at this as a potential peak, looking at this as a potential sell to get out, run for the hills. This being the low, that would have been the high, being inversely correlated. But now if it's directly correlated, this is a low, so 16 March should be a low. So let's see what happens. If it remains directly correlated, 16 March is going to be a low. It's going to be a red candle. If it's inverse, it's going to be a peak, and I will stick to my initial analysis of selling it there. Anyway, let's predict further into the future. This looks like a mega pump from the origin, and that would have been a great sell. So if it's directly correlated, a great sell would be the 4th of May, which the old adage goes, sell in May and go away. Well, let's see. I think they're gonna probably try and trap us. I mean, now we're just going into no man's land. Absolute low here. Does that mean there's going to be an absolute low forecast here in October 2026? I think so. Low for low. We might as well put a vertical line here and call it low for low. And that will be the end of the video. I'm going to save this for myself because that's an interesting observation. Absolute low for low from origin. Thanks for watching.